hopping on our call every single week. Kudos to you, because it's so important to know the current information and to get the word out to our people. And you know, the more that all of us can be posting videos and getting on our social media on Instagram and Facebook and calling our database and setting up Zoom meetings with our sphere and our farm, the better it is for all of us, because we need to get rid of that negative narrative. And like we've said in the past, all the information that we're sharing is from the top economists and top financial institutions. So it's super important to make sure that people know where you're getting your information from, just as much as sharing the current information. And also with that, if you know any other realtors that you work with or friends that you work with that you think could also benefit from hopping on these calls, you know, share the link with them, because it's so important that everybody is sharing this information to get the word out and to change that narrative. So kudos to all of you that keep hopping on with us for the past, gosh, I think we've been doing this for over a month now. And starting today, we're going to be doing this bi-weekly now. So the next one will be 2 weeks from today. So let's get started.
And then also, just as a reminder, I want to let you guys know that we will be sending these slides out at the end of the call. So if you don't have to be frantically taking notes or screenshots, we will give them to you and then answer any questions along as we go. So if you have any questions, please feel free to put them in the chat. Kim and I are keeping an eye on that, and we'll answer them as we go. So let's get started.
All right, so let's read this quote that we have here by Chris Heisey, Chief Investment Officer for Merrill. It says, weekly jobless claims released May 21st totaled nearly 2.4 million, yet continuing claims workers already unemployed and receiving ongoing benefits have leveled off. That means workers coming back into the economy, whether temporary or full-time, are at the same levels as those going out. And you know, the question that keeps coming up with unemployment is how many people are going to be getting their jobs back? And we're trying to stay on top of this information, but unfortunately it's not readily available. And there are different stories to what that looks like. But everything is pointing to June 5th when the May unemployment report comes out. So we will definitely be keeping you updated on this.
And as Kim mentioned, guys, that we are now doing this class every other week as things are starting to stabilize a little bit. June 5th does fall on one of our off weeks, but we are more than happy to jump on and do this call and give you guys a full unemployment rundown with the new numbers, because they do come out the 5th at 8 a.m. Eastern time. So that'll give us a few hours to distill the information and then get it out to you guys. So just let us know if you would rather us do a full call on unemployment on June 5th or just wait till the following week.
Thanks, Taylor. So an interesting study came out that I wanted to share with you, and it's maybe more of an informational piece for you to share with people as you're being asked about things pertaining to unemployment. This study came from the University of Chicago, and I just want to walk you through to get you more of a perspective on the reality as people are getting back to work. So what it's saying here is 68% of unemployed workers who are eligible for unemployment insurance will receive benefits which exceed those lost earnings. So good news there for people filing for those benefits to exceed the lost earnings that they will miss, but just something to keep in mind as you think about those people that are being affected. And next, as we see here, it says 20% of eligible unemployed workers will receive benefits at least twice as large as their lost earnings. So just wanted to give you a perspective of things that are being done for those that need the help. And if we look here below, it says the CARES Act actually provides income expansion rather than replacement for most unemployed workers. You know, people and families have definitely been affected, but just keep in mind what the reality is. And we want to talk more, and as we talk more about the recovery and the housing market related to the recovery, those questions are going to be hovering, and we will stay on top of it as we move into the second half of the year. And next, this is just a quick note we wanted to bring to you about the Federal Reserve. This is a survey that employers and what they are saying about their layoffs. So 75% of job losses are temporary layoffs and furloughs, according to employers. And also in that same report, it's saying that 3 new hires for every 10 layoffs because of COVID-19 pandemic. So then below, you can see the alignment. This result aligns with new reports of large-scale hiring at firms like Amazon, Walmart, CVS, healthcare, Domino's Pizza, and other companies that saw increased demand in reaction to the pandemic and partial shutdown. So you can go on to the next. And this is a blog that we posted on Wednesday on why this summer is the 2020 real estate season. And I want to bring to you new developments inside that story that may help bring some sense of that and communicate what is happening in our area and certainly across the country. With stay-at-home orders starting to gradually lift across the country, data indicates that home buyers and sellers are jumping back into the real estate market. Zillow recently reported a 5.9% week-over-week rise in homes listed for sale. And NAR also notes that buyer demand is strong and stable in all 50 states. Also, according to Google Trends, which surveys search terms online, stated that real estate terms jumped from 68% the week of March 15th all the way up to 92% last week. So as more and more listings increase and buyers are eager to look for homes to buy, the real estate market is definitely poised for a strong summer. Let's look at this quote by Danielle from Showing Time. And remember, Showing Time lets us know if there are people out there in the market. So in the quote, it says, the beginning of April marked the absolute bottom of per capita real estate activity since the Great Depression, as 3/4 of buyer traffic just evaporated. Yet that was immediately followed by an unprecedented turnaround. And we've seen a significant rebound in May as rapidly returning buyer traffic concentrates on the subdued levels of inventory. And it's interesting looking back and hearing Showing Time saying the bottom in April, because we knew that, we saw that, but let's remember that is in the rear view mirror and was immediately followed by an unprecedented turnaround. We talked about that and reasons why people were coming back to the market and reasons why, regardless of there being a pandemic, that people needed to buy and sell their homes, such as people getting divorced, people moving out of state, and maybe even a death in the family. And it further enforces that with saying we have a huge challenge in the market with low inventory. So the next slide, let's bring in the updated Showing Time graph. And Showing Time continues an upward trajectory. And it's interesting to note that we are above the showings where we were this time last year nationally. So I know we're always talking about the macro versus the micro. So Taylor is going to share with you on the next slide what's going on here in Arizona. So take it away, Taylor.
So many of you guys have seen who needs to mute, graph that's been going around social media. It's going to be the Showing Time graph. Just so you guys know, they do update this daily with the most current information, and it's the log of the last 24 hours of the traffic we've seen here in the state of Arizona. So I would definitely keep an eye on it, because this is going to be a great tool to share to your database within the next week or so. We are expecting to see us back where we were last year. So keep this in mind. And in our follow-up notes, we'll also share the link to this graph on Showing Time's website, so you guys can constantly check it yourselves. But then going into today, this is going to be a quote from Sam Qatar, which is going to be a Freddie Mac chief economist. And for the fourth consecutive year, 30-year fixed rate mortgages have been below 3.30%, giving potential buyers a good reason to continue shopping and even amidst a pandemic. We want them to realize that they can potentially get into a larger home and or a more expensive home than they anticipated because rates are so low that their monthly payment is going to be lower than expected. So as Anthony said in the chat, you know, summer is going to be the new spring and our market is hotter than ever. And this is going to contribute to the remarkable climb that we're going to see, not only in the market, but also in the economy. So as the states reopen, we are seeing purchases demand improve remarkably fast now, especially the flat relative to a year ago. Moving forward, this is just going to be a quick snapshot that is actually fun to share. It's going over the average interest rates for the last few decades. You know, we are actually even seeing 3.24 is the average today, but on our end, we've seen stuff as low as 2.9 to 3.1%. You know, more people are coming back to the market. And even if people aren't necessarily ready to buy, it's a great time to be the voice of reason and help build the, like, you know, you trust you factor within your database and sphere, because you can inform them of this information and hopefully get them in touch with a great lender to get them refinanced and help them save a little bit of money. Because when it comes time to them being ready to sell, you're going to be the first person that comes to mind. So going on, sticking with the mortgage theme, applications of mortgage rates and purchases of homes gained for the 6th consecutive week at a level that was 6.7 higher than this time last year. This is going to be a very interesting article and quote that Housing Wire posted on Wednesday. All this information is pointing towards us going forward and continuing to grow a very, very strong summer market. The demand we are seeing being talked about is very important. And note that we are coming back with real estate leading the economic recovery. And we are looking that the second half of the year is going to be even stronger, and we're going to be rebounding a lot quicker than people are anticipating. So let's take a quick look at the NRA stats, existing home sales reports, and walk you through and give you the snapshot of where we are across the market. Using, this is going to be using all April data. We were down 17% total and down almost 20% total housing inventory. So if you take those two numbers, we are down existing home sales, although trending down in the numbers of home supply of the market, which now giving an upward pressure that we are talking on prices across the country, where the average median home value increased 7.4% last year. So these are all going to be your national numbers. And now going into the Arizona numbers, supply is down 24% from this time last year. You know, our demand is also only down 9.1% where it was at the peak of sales in February, and we are only down 4.8% compared to this time last year. But some great news, cancellations, that big boom of them have, you know, slowed down. We're back into the normal range of about 15% cancellation rate. And this is going to be the 5th consecutive week of increasing counts of acceptance offers, up 49% since April 5th. So keep this in mind. You know, as next week comes around, we're going to hear the doom and gloom about unemployment numbers and how it's affecting the housing market. But people don't realize how the housing market has already been affected by all the stimulus the government has given us, as by keeping interest rates low, and also just everything else that's going on. Our supply is so low and our demand is coming even higher, so that's going to help raise the prices higher and higher. For those early signs that point to this quote, looking for a house in the sector to recover before the rest of the economy and lead other industries into expansion. Once again, we've stated this before, but it looks like they are relying on you guys to bring the economy back. which no pressure, but I feel like you guys have already started on the right path, and more power to you guys. And thank you for everything you guys have been doing and working hard even in these times. And a cool thing I want to point out is leading me into this next graph I'm going to show you, and it's going to talk about the economic impact that just one home sale has. Why the housing market is powerful economic driver. It's important to understand that housing can be a major impact on the recovery of the US economy. Here's a breakdown on the average home sales boost in the economy. NRA recently shared this post that notes a full economic impact of just one sale. It's crazy to think about that. Nationally, we are seeing about $88,000 go back into the economy just from one home sale. It's everything from construction costs, real estate brokerage, mortgage and lending, and title insurance. So going forward, this is going to give you a breakdown state by state. And Arizona, we're right on trend with everything else. We're actually a little bit above at $89,000 coming to the bottom line when just buying one home. This is great. And, especially now that we're seeing the homes come up, the sales come up, we're going to start seeing this money drive back into the economy, and hopefully we'll rebound even quicker. But one of the other questions we see rising to the top is, when is the economy going to recover? And no one knows how the rebound's fully going to play out, and expert economists around the country are becoming more aligned on when the recovery will begin. According to the Wall Street Journal Economic Forecast Survey, which polls more than 60 economists on a monthly basis, it's showing that 85.3% believe a recovery will begin in the second half of 2020, which is great because, you guys, technically the second half of 2020 starts in a few days. This is going to be the last business month of May. So, we're closer than ever in starting this recovery. Moving forward, in addition, the 5 major financial institutions are also forecasting positive GDP in the second half of the year. Today, 4 out of the 5 expect a recovery to begin in third quarter of 2020, and all 5 agree that the recovery should start no later than the fourth quarter. Bottom line is that the vast majority of the economists, analysts, and financial institutions are in unison, indicating an economic recovery should begin in the second half of 2020, and agreement among these leading experts is stronger than ever. And which is crazy because with politics and everything else involved, it's hard to get this many people on one page, and it's great that we are now seeing it. But with that being said, I know we did cover a lot of information, and I wanted to open this time up for any questions and or feedback. And also, we would like to know if you guys want us to do the class next Friday on the unemployment numbers. That's completely up to you. If not, we will put the information in the following week's presentation.
Hey, Taylor and Kim, can I just jump in real quick?
Go for it.
Hey, great job, girls. You guys do a great job every week doing this one. And, the unemployment report comes out next week, and you guys will have some great numbers on that one. But, we had a call this week, and if some of you weren't on there, reach out to Kim and Taylor. They'll get you a copy of the call. But we had Kyle Whistle on there, and you talk about how to get this information out here. They're supplying you all this information, and these girls are great with regards to social media and getting the word out there. Kyle gave us, 10 tips on 10 videos you should be posting right now in the COVID environment. But he also mentioned, some of us are fearful to do video, and we all were doing it. If you see some of my videos, I don't think they're the greatest in the world, but I'm out there getting the information. But he had one of the best quotes ever. And excuse my language when I say this, but he, for example, when you're doing a Facebook Live or an Instagram story live, he's like, my shitty Facebook Live video or Instagram videos better than the video that you didn't even do. So I want you to think about that one. It's hard to, don't overthink doing video. You don't need all this great equipment. You have your phone here. There's a little button there that's a little red button. You just push play and you start talking into it. You have the information, and these two will help walk you through on how to post that information. So great job, girls. That's all I want to point out.
Thank you. And also, we We can also do at the end of each presentation, share a quick little tip or idea or tool that we have. So if there is something that you wanted more information on or wanted us to share, just let us know as well. So I know the past few weeks we've shared something at the end, but today we just had a lot of information. We didn't really have time to squeeze a tool in at the end, but let us know if there's something you'd like us to share with you or help you with.
And Michael, thanks for the feedback on waiting until the 12th for the unemployment numbers. We will, if that's the general consensus, then that's what we'll go with, and we'll wait till the 12th then. But with that being said, you guys, if you aren't following us on social media, you're going to see both mine and Kim's social media handles here. Follow us on Facebook and on Instagram. We are posting stuff daily, so please check out our stories as we're trying to get this information to you guys as quickly as possible and most up to date as possible. So that's going to be the best way to find it in the interim between these calls. But if no one else has any other questions, then I hope everyone has a great Friday, and we'll see you in 2 weeks.
Thanks. Bye, everyone.
Bye.